Welcome to your ACCA UK Taxation course. My name is Laura and I will be taking you through the 26 topic recordings that will cover all the key syllabus areas needed to pass this exam. This is our first topic recording, Introduction to Tax, and let's take a look at what we will cover. We're going to start off with an introduction to UK tax. Then we'll move on and have a look at some of the sources of law and practice that shape UK taxation. Then we'll have a look at the really important distinction between avoidance and evasion. We'll have a brief look at double taxation, and then we'll wrap up this topic by having a look at ethics and a professional approach. Let's have a look at this first section, Introduction to Tax. And let's ask ourselves, what is the purpose of tax? Now, I'm sure you know that tax is money that is collected by governments, and then governments use that central pot of money to pay for public services, but also use it to provide targeted financial support to those who need it. And that targeted support may go to families, individuals, or businesses. In the UK, the tax system is administered by HMRC. So that is His Majesty's Revenue and Customs. And HMRC have a number of stated aims. Let's have a look at those. First up, they want to collect the correct amount of tax from taxpayers and also pay out the correct amount of financial support to those who need it. The system is designed to make it as easy as possible for taxpayers to calculate and pay across the correct amount of tax. But in order to make the system fair, it is also designed to make it hard to bend or break the rules. The tax system is also designed to make sure that it can help deliver the government's wider economic aims. And in order to do that, the system has to be resilient and agile. Tax is also used to drive behaviour. So for example, tax can be used to encourage positive behaviours. One example that we'll see in this course is tax relief for pension contributions. So this is designed to encourage people to make pension contributions and encourage that desirable behaviour of longer term saving to help individuals fund their retirement. Similarly, tax can be used to discourage some negative behaviours, and examples of that we will see throughout this course would be environmentally motivated legislation. One thing that we will look at is the benefit in kind on company cars is much lower for electric vehicles because they are more environmentally friendly, and it is higher for those with higher CO2 emissions. So again, discouraging individuals from choosing those higher emission cars. Now we're going to have a look at the 7 taxes within the UK tax system. So these are as follows. We've got income tax, national insurance, capital gains tax, inheritance tax, corporation tax, VAT and stamp duty. Now the first 6 of those taxes are included within our UK tax syllabus. Stamp duty isn't, but it is included here for completeness. And also for those of you that want to go on and study advanced tax, then you will also look at stamp duty within that syllabus as well. Now we can divide these UK taxes into various different groups, and that's what I want to do for you now. One of the most important distinctions is we want to look at the taxes that are paid by individuals like you and I, and we want to look at the taxes that are paid by companies. And it is a really important distinction because I find that students often become confused when they're looking at a question. Maybe it's a question on an individual, but actually they might start to use some of the taxes that are only applicable to companies, or alternatively, they might be looking at a question on a company, but start to use some of the taxes that are only applicable to individuals. So really important that we make this distinction for you up front. So let's have a look at the UK taxes that are payable by individuals. So these are as follows. We've got income tax, national insurance, capital gains tax, inheritance tax, VAT and stamp duty. So they are all the taxes that can be paid by individuals. Let's contrast that with those paid by companies. So when we're looking at companies, the applicable taxes will be national insurance, corporation tax, VAT, and stamp duty. So just take a moment to note that companies do not pay income tax, they do not pay capital gains tax, and they do not pay inheritance tax. Now, I will revisit this point as we proceed throughout the topics, but it's helpful to make that distinction up front. As well as taxes paid by individuals and those paid by companies, I want to point out the difference between direct taxes and indirect taxes. So let's take a look at our direct taxes first. So I've popped on the markers here for those paid by individuals and paid by companies as a reminder. A direct tax is a tax that is charged on income or benefit or profits, and the person who suffers the tax, in other words, whose liability it is also the person who pays that tax across to HMRC. And within the UK, our direct taxes are income tax, national insurance, capital gains tax, inheritance tax, and corporation tax. Let's contrast this with our indirect taxes. Okay, so let's have a look at our indirect taxes. So as you can see here, our indirect taxes are VAT and stamp duty. And the definition of an indirect tax is one that is charged, a tax that is charged on goods and services rather than income and profits. So for example, VAT is charged on turnover rather than profits. So it is an indirect tax. Now, one last distinction in these taxes that I would like to make is between what we call revenue taxes and capital taxes. So let's take a look at our revenue taxes. Within the UK, our revenue taxes include income tax, national insurance, and corporation tax. And very broadly, a revenue tax is one that is on income or profits, typically that are earned in a year or an accounting period, depending on the tax that we're looking at. Capital taxes, on the other hand, are designed to tax capital wealth. So rather than profits or maybe income, for example, that you've earned from a trade or employment, capital taxes are designed to capture capital wealth. And the examples of capital taxes within the UK are capital gains tax and inheritance tax. So just have an awareness of all of the taxes that we're going to look at. Make sure that you're really clear on those that are paid by individuals and those that are paid by companies, and have an awareness of the difference between direct and indirect taxes and between our revenue and capital taxes. It's very helpful at this stage, and this is something you might want to revisit as you progress through the course to help you with your understanding.